Have you never noticed how someone can earn a decent salary, live responsibly, avoid obvious mistakes, and still feel permanently behind? Not broke, not irresponsible, just stuck. That's the uncomfortable reality for a lot of professionals today. Let's walk through a familiar situation. Imagine a 30-year-old professional in the US or Western Europe. They earn around $70,000 a year. On paper, that sounds solid. After taxes, Social Security, healthcare, and pension contributions, take-home pay drops closer to $4,000 a month. Now, life begins subtracting. Rent or a mortgage takes $1,500, a car payment and insurance take another $500, student loan repayments sit quietly at $300, utilities, phone, subscriptions, groceries, another $600. Before doing anything fun, more than $2,900 is already gone. What's left doesn't feel like wealth. It feels like breathing room that disappears quickly. So what happens next is very human. Dinner's out because work is exhausting, a newer phone because everyone else upgraded, a vacation on a credit card because I deserve it. Nothing extreme, nothing reckless, just normal, socially acceptable choices. And this is where the invisible habit lives. The problem isn't spending too much, it's judging affordability by monthly comfort instead of total cost. Let's look at one simple example. That $500 car payment feels manageable, but over 5 years, that's $30,000. Add interest, insurance, maintenance, and depreciation, and the real cost moves closer to $40,000. But the brain never feels $40,000, it only feels $500. The same thing happens with credit cards. A $3,000 balance feels small when the minimum payment is $90, but at 18% interest, that small balance quietly drains thousands over time. This isn't a math problem, it's a perception problem. Our financial system encourages this way of thinking. Everything is framed as monthly: streaming subscriptions, phones, cars, even furniture. The question isn't how much does this cost me, it's can I fit this into this month? Psychologically, that's comforting. Monthly payments reduce emotional friction. They make large decisions feel harmless. And for professionals, people who are educated, busy, and mentally taxed, this system works perfectly against them. Because when your income is stable, your brain stops being cautious. You assume tomorrow's paycheck will handle today's decision. Over time, something subtle happens. Your lifestyle becomes optimized for income, not wealth. Every raise gets absorbed. Every bonus gets pre-spent. Your financial life becomes efficient but stagnant. 10 years pass. Income is higher. Stress is higher. Savings feel underwhelming. Freedom still feels far away. Not because of one bad choice, but because of 1,000 invisible ones. Now here's the quiet shift financially intelligent people make. They don't ask, can I afford this monthly? They ask, what does this choice lock me into? They think in years, not months. They see debt as a claim on future freedom, not just cash flow. When they commit to something, they understand the opportunity cost, not emotionally, but calmly. That doesn't mean they live cheaply or joylessly. It means they protect flexibility. They leave space in their financial life for uncertainty, for job changes, for health, for opportunities they can't predict yet. And this mindset doesn't require extreme discipline or sacrifice. It requires awareness. Once you see that most financial pressure comes from decisions that felt harmless at the time, you stop blaming yourself and you stop repeating them unconsciously. This isn't about cutting every expense, it's about seeing the full picture before committing your future income. Because wealth, for most professionals, isn't built through dramatic moves, it's built by avoiding quiet traps. If this perspective helped you see your finances a little more clearly, consider subscribing to the channel. That's all. No pressure, just clarity.